My name's Chad Peters. I'm president and CEO of Ridgeline Minerals. Ridgeline is a precious and base metal explorer focused on making new discoveries in Nevada. We explore our own projects 100%. We also have big deals with partners such as Nevada Gold Mines and South 32 Limited that allow us to be more aggressive and explore our projects across a large portfolio.
Good to see you, Chad.
Yeah.
We're up the mountains.
Yeah.
Now you got a busy old week, right?
Yeah, over 35 meetings, yeah.
Nice. Okay. And good meetings? I mean, what type of people are looking interested?
Yeah, no, that's the great thing. I think the great thing about Beaver Creek is you really do get a pretty vetted investor group coming in, right? So every meeting we have is either a family office, high net worth individual, or a corporate that's looking to do due diligence on the company. So.
Right. Okay. And the first thing they got to do with you is understand the business model, right?
Right. Yeah.
So it's unusual. Well, we've seen a few. Not many companies do it. And it does kind of feel like it's a bit of a slow burn, but the upside, the inflection point is pretty
huge, yeah.
Big torque, should we say.
Yeah,
So let's explain the model to people.
Sure. So we're what you'd call a hybrid explorer. So what that means is we do have elements of the prospect generator business model that's embedded in our company, but we also explore our own projects 100%. And so, for example, this year we have 5 drill programs ongoing across our portfolio. 2 of those were fully funded by Ridgeline. It was about $1.5 million of our $11 million US budget for the year, which is our largest budget in company history. The other 3 projects being explored is our Swift, Black Ridge, and Selena projects. Mm-hmm. Swift and Black Ridge are both under earn-in agreements with Nevada Gold Mines, totaling $40 million US across both projects to earn up to 75% in either project. Right. If they hit those milestones, Ridgeline would retain a 25% fully carried interest to commercial production. And I think that's like the really critical piece to that.
That's the secret sauce. Yeah, it's through to commercial production. This isn't through to PEA.
Not feasibility.
Amazing.
It's commercial production. And so these deals are quite unique. And what we want is we like the idea of spending other people's money, right? We have had some big ideas at Swift and Selena in particular. Of testing some really deep targets on trend of known deposits, great potential, both South 32 at Selena as well. It's a $20 million deal for 80%, and then we retain a 20% full carry to production as well. But we really wanted to test some ideas, and it was a great idea to bring in a partner with deep pockets that liked the technical aspect of either the merits of each project and was willing to put their checkbook behind it. So.
And you're doing the actual work. You're getting the management fee for doing the work, which kind of covers at Selena, right? So that goes a big way to kind of covering your G&A, presumably.
It's huge, actually. It's the first time we've ever done. So NGM runs their own projects. We just get to be partners in it. But with Selena, we're actually running the exploration, and we're essentially cash flow positive while the drill's returning at the Selena project, which is a new thing for us, and it's pretty amazing to be able to offset that cost.
Right. Okay. And obviously that keeps the kind of capital raises that you need to do down to bare minimum.
Ideally, and in theory, it minimizes dilution. Allows us, our team, which is a very strong technical team, to remain working on the project and driving it forward technically. But we do have that support of the Selena for South 32. We just had their drilling supervisor fly from Perth. He spent a week at the rig just tuning in every aspect of from mud to whatever, and that was the kind of value add that the group like South 32 brings.
Okay, so there's the model. Explain for people who need this story. So that it kind of encapsulates most of the points. Let's kind of drill into it, pardon the pun, with regards to Nevada Gold and obviously South 32. So the South 32 program looks like what? How are you involved in terms of that decision making, and I guess how do you influence their spend and what they do? Can you?
In this case, we're really driving the whole thing forward.
Right.
So they've been great partners in that they've said, look, you guys know the project better than we do.
Yeah.
Come up with a budget, an exploration plan. We went through about 3 iterations of that over a 2-3 month period between us and their team, saying, okay, drilling down on what we thought would be the appropriate program to start off. And we landed on $3.5 million this year, which is about 3 holes. So we're talking about very, very expensive drill holes, but pretty meaningful if they hit. So we have a pretty significant discovery at Selena already, especially in a gold-silver market like we're seeing. And we had up to 30 meters of 300 grams silver equivalent, with up to 6 meters of well over 1,200 grams silver equivalent.
Yeah.
That's a mix of silver, lead, zinc, and gold in a CRD deposit. And the main thing was we knew we had something pretty significant there. But we wanted to test on strike of that known discovery, test back towards the porphyry source, and that's what we're drilling now. If we're correct, it'll be a very, very significant CRD discovery, and that drilling's in progress now.
Right, okay, and I guess having said that, now we're going to kind of get it finessed in terms of the agreement as well, which is, obviously for South 32, that's not a whole bunch of money. You know, yes, it's expensive per hole, but in terms of the context of their overall total exploration budget elsewhere, it's not a bunch. How do you keep them involved and moving forward? Because, you know, it's all well and good having the, was it 20% upside?
20%, yeah, 20%.
20% for them, right? Through to production if they don't get to production, right? So, because like I said, it's a secret sauce, but it's also a massive return for you guys, and that's what I'd be buying into. So, how do you work out how do you get them to continue planning? What do they need to see from Selena to keep involved? Yeah,
so they pretty much, if we continue to see what we've already drilled at our chinchilla oxide discovery, but we continue to see that at depth in this chinchilla sulfide target that we're drilling right now, that would be the kind of grade and scale that they want to see. It would just show that there's significantly more there than what we'd already discovered at the outcropping discovery. So yeah, they're really excited. We talk to them daily, right? Their entire technical team. We're actually on a Microsoft Teams channel where it's literally just flowing back and forth. So they're incredibly involved, been really good partners, and yeah, I think we're onto something.
But they got to make a decision and say, we're going to continue on with this thing. You've got to make a decision and say, hey, we're going to hand it over now because we want the upside. But you're no point handing it over if they don't go slow, right?
No, right. They need to spend an initial 10 million, and that's that handover point, right? So for the phase one earn-in of 10 million for 60%, that's the point where we're driving the exploration
Where
forward.
now?
We're in $1 million into that 10 million.
Right. Okay.
So we're right at the start. We drive that exploration forward. We push that through that 10 million spend. At that point, that's the tipping point where they then go, okay, we want to run this now. We're going to take over and we're going to drive this to 80% by spending another $10 million.
Right. And what's that spend curve look like? Obviously, it starts slow. If we got something, carry on.
Accelerates.
Yeah, we definitely got something. Let's really ramp this thing
up. Yeah,
it
accelerates pretty fast. So it's 10 million over 5 years, which is quite modest when you actually think about it. But then after that, it's 10 million over 3 years. It starts ramping up. And then once they hit their 80%, it's an automatic trigger on the free carry to commercial production. So how they advance the project, what they spend after that, is, it's their choice how they move the project forward. But Ridgeline doesn't have to dilute.
Okay, so again, can be really clear, because I think this conversation is about like being very honest and articulate with investors, saying, so it's a longer term play. Like I said, it's a get rich slow scheme, right? Where they move through the phases, and I get to a point where I remember I've got these shares, and I go, oh yes, that's how can I cash in. Your job in terms of building these opportunities is, obviously we'll talk about Nevada Gold in a second with a couple of projects there, and your own, is to kind of stack these opportunities, because they're not all going to come off, and they're certainly not all going to come off at the same time. So maybe let's do Nevada Gold, and then we'll kind of get into that kind of stacking.
Yeah, absolutely. So, and you're right, because exploration it's a tricky business, right? And certainly not every deal you do is going to be a home run. So when you look at our Swift and our Blackridge deals, they're 30 million for 75% and 10 million for 75% at Blackridge. NGM is driving that forward. In the case of the Swift project, that was inked in 2021. They're actually coming up on their final year of the deal, where they have to spend 20 million to earn 60. So they've spent 10.8 million through the middle of this year, which means there's another, 9.
What have they found?
We've hit up to 10 grams over 1.5 meters, 3 meters of 7 grams per ton. The same general grades that you see in the nearby mines, the underground mines, but a little bit thin, right? So what they've said, okay, we now know this project can produce high grade. We got the right host rocks. We're directly on trend of a 20 million ounce gold mine. We have all these pieces are coming together. This year, it's can we find 10, 20 meters of those exact same grades? If we can do that, it'll be a multi-million ounce discovery.
Okay, so that's what they want out of it. Is what you need out of it. Let's move on to what you're in control of, because you've done a few things. You've done a spin out, and obviously you're drilling as well. So the spin out, why do that?
Yeah, so we part of the, I guess you call it the prospect generator arm of the business, is we're always staking and bringing in new opportunities, right? And in 2024, we identified at the time what we thought was going to be another porphyry CRD target for Ridgeline to advance. And we ended up staking a historic mine site and a bunch of other bigger land package. Did the research after the fact and realized it was 2 of the highest grade tungsten deposits in U.S. history. So,
Nice.
went, okay, that's
Not
different.
a lot of tungsten in North America.
No domestic tungsten production,
Amazing.
I believe, that I know of, and it's actually quite a tight market with China controlling about 85% of global supply. So we saw an opportunity where the critical metals market and the U.S. administration was starting to kind of amp up critical metals needs, I guess, or at least understanding that they required more of them.
Yeah.
And so we saw an opportunity. We ended up spinning out Spartan Metals into an RTO'd into a clean shell on the TSX. Ridgeline owns 20% of that. Great management team that's coming in that we know well, and they're going to push it forward. And I think it's a really good equity position for Ridgeline that could grow considerably.
Interesting. Okay, so you're not looking to kind of cash in that $1.5 million or so anytime soon. Again, that's in the back pocket.
Yep.
Let's watch that thing grow.
It's a great opportunity for us for a non-dilutive financing for the company.
Yeah.
So, if you think of like what Kennerland did with Lift Power about 3 years ago, I think they monetized a very similar lithium spin out in that case.
That's right.
For around $23 million. And that's funded their G&A and their own internal exploration for the last 3 years. And so we saw that as a similar playbook for us. And we invested about $150,000 into generating the asset. And before the financing is even complete, it's ongoing right now. That equity position is worth about $1.5 million. So it's been a good investment for us, and I think it'll grow.
Okay, and then finally, your own project, which you're
Our
drilling
exploration.
away.
So
What's
on
happening?
our 100% owned port side of the portfolio, we did maiden drill programs at 2 projects. Atlas was an oxide gold play, and Big Blue is a porphyry copper CRD play. And both programs hit some pretty interesting results. They didn't get the market humming just yet. For example, at Atlas, we hit over 300 meters of continuous low-grade gold, uneconomic, but shows, okay, you got a very large oxide gold system here, and the first 2 holes that we drilled, we didn't drill into the heart of the system, but we did hit quite a bit of alteration, up to 2 grams per ton oxide gold in individual samples. So that piqued our interest, and we said, okay, we got the right thickness of rock, we can get 2 gram per ton gold. This has potential legs, and so we will be advancing that project forward next year. And then at Big Blue, we drilled 0.6 meters of 3,200 grams silver, 0.7% copper, and 2.6% tungsten in a deep high-grade hit along a feeder fault. So narrow, but incredibly high grade. So for a maiden drill program on a project that hadn't been drilled in 20, 30 years, pretty interesting.
So, okay, there's the portfolio. Now we're going to just talk about that kind of stacking system, okay? Because you've started obviously strong, and we've talked about your background previously, where you've got a bunch of projects off and running, finance for the drilling, you've got your upside, further down the line. You've done a spin out, you've got something that you're drilling now. You need to keep doing that though.
Yep.
Right?
Yeah,
so where do you find this stuff? And to be able to replicate this model and keep this going? Because ultimately you want a kind of portfolio, a large number of these projects, because it's a percentage game. Really.
For sure. And the way you say stacking, and I think it's a great way to explain it, because Swift is in year 4 of the deal.
Yeah.
Blackridge is going into year 3, and Selena's in year 1. So you start stacking these things, and they're at different stages of each deal. It means that every single year we're seeing aggressive exploration being done on the project. But you're right, we need to be picking up more. Our Atlas, our Big Blue projects, that's an early stage pipeline. We are going to continue advancing those projects 100%, but we've already had interest from other groups saying, hey, we might want to partner here. And so we're always assessing, do we want to advance it ourselves, or are we going to do a deal?
Yeah.
And
are these all in close proximity? Are they close by?
Yeah, I mean, if you want to, like in Nevada, you'd say that they're, everything's within a 5-6 hour drive of each other.
Okay.
North central Nevada. So
Okay,
we're
fine.
not going different states or having to fly.
So in terms of finding more, picking up more, how early do you need to enter this? I mean, are you going out staking yourself? Can you pick it up from people? Perhaps
nowadays, I'm not staking myself as much.
You've done it.
I've done it, but
but I'm saying, how do you pick this stuff up quick? Kind of get this stacking thing going, because when the sooner you start, the sooner these things create value.
Yeah, absolutely. I mean, I think what gives us a distinct edge is we're one of the few explorers in Nevada that actually has their management, including executive team, living in Nevada.
Yeah,
so,
essential.
On weekends, whatever, our guys are out, we're prospecting, we're looking at new things. Typical thing here is, we get excited about something. The timeline from, assessing an early stage project to putting stakes in the ground can be as quick as a week, right? If we really like what we see. Typically, it's more a 2-3 month process of going through the history and researching a project and taking samples, etc. But it can be anything from, if we really believe in it, we can jump on it like Big Blue. We jumped on that in I think 4 days.
Right.
Saw the outcropping mineralization, said no, we got to own this. So we can be pretty quick about it. We're assessing multiple things right now in the gold and porphyry copper space in Nevada. So we'll be bringing in more assets.
So clearly there's going to be a bit of competition as well along the way. So how do you outmaneuver these other people who would be looking at the same land packages?
Right. Well, it's interesting. There's a couple groups that do it in Nevada, do similar things to us. Headwater Gold's one of them, right?
Yeah.
And what I think has maybe worked out well for all of our groups is, Headwater really focuses on low sulfidation, high-grade vein deposits, right? So that's their specialty. They're the best at it. I'm not really trying to compete with them on it, right? Because they're kind of ahead of the game on that. I like to think at the same time that on the Carlin-type gold, porphyry copper space, we're one of the leaders on that in Nevada as well. So we're kind of able to stay ahead of folks. I think a lot of the people that are actually staking ground in Nevada are actually independent prospectors as well. A lot of the companies don't actually do the prospecting themselves, right? So we're able to go bigger and faster than a lot of the prospectors that are maybe hampered by funding as well. So we have the ability to be a little more aggressive.
Okay. So I think this year, obviously, what we're focused on.
Yep.
In terms of how long you keep doing this for, it's going to be dependent on a success. I understand that.
Yep.
But if I'm an investor, define the type of investor who'd be interested in this. I think.
Yeah, I think you look at guys like Rick Rule. He was a big investor in the company for a long time. Guys that are coming in, they like the potential return of a major discovery, right? They want to participate in that, but they also don't want to get just continuously diluted out. And I think so. When you're looking at folks that are willing to take a longer term view of an investment, if you're looking to do a 3-month flip or a 4-6 month flip, Ridgeline's not the company for you, right? But that doesn't mean we don't have tremendous value that we're building. But you're right, it is a slower burn. And I think the real thing that'll kick something off is just a major discovery at any one of these partner projects, right? Because one of the first questions investors ask a lot of times when a little junior makes a big hit, and say, well, that's great. How are you going to fund it? Obviously, a big financing's coming, right?
Yeah.
In our case, that's not going to happen, right? We get a big discovery. I don't need to run to the market and say, I got to raise $10 million at whatever terms I can scrape together to fund this. I can just let our partner do their thing. They'll fund it a bunch, or fund it 100%, and then we're able to participate and actually make money off the Selena deal, right?
Well, I think that's the clever bit of your model, which is the setup.
Yeah.
You put yourself in a position where, if it advances, you've carried the way through to production. If it doesn't, you kind of got the claw back and say, well, actually, I'll have that back, please.
No, totally. And
all good.
Yeah, and there's great examples, like Kennerland's a great example right now of a company that's around a 200 million market cap. They employed the exact same hybrid generator model. And they made a discovery about 2 years ago that's propelled them from a 30 million market cap to around 180 or 200 million right now. So significant returns. But there's been lots of stories over the years of groups that own minority interests that end up selling their stakes for, significant sums, hundreds of millions of dollars. So the return on the stock can still be incredible. Even if you don't own that, the full 100% of the project. And I think where it comes down to is having that free carry, right? Either I could own 100% of a new discovery and have to fund it ourselves. The dilution's coming either way. In our case, we dilute at the project level, but corporately we try to keep things tight.
Yeah, and I think the other thing to point out is if someone does hand that back, it's because it's not quite right for a major in terms of their profile and maybe everything else that they've got going on in their portfolio, but it may be right for someone else. Totally. So you've got the options to kind of resell and go again as well, haven't you?
Absolutely. So,
Chad, good stuff. Good to see you, man. Keep doing your thing. I really like it. And enjoy the rest of the conference.
I will.
Try and get some sleep.
Yeah, try.